Yeah, can.
Right. Morning, everyone. Welcome back to Morning Cuppa 8. Happy Tuesday. Okay, so looking at the S&P 500, it inched up on Monday, but this was not narrowed really as the Dow Jones fell, right? So the index was, I think the index was propped up by the surge in AI as well as the mega cap. So uh, yeah, I think for the main driver, it was Amazon, which is that hit the new record high after announcing the massive deal with the OpenAI, right? So for the index, S&P 500, we're still looking at the 6,950 points for the resistance, and also if any pullback to happen, do look out for uh, 6,800 points level. Right. So, looking at our US trading stock that we have published overnight, right? So we have Palantir Technologies here. So the stock is on its breakout formation, breaching above the $195 level resistance, right? So I think we can expect that the stock to travel towards the 210 dollar level on a strong momentum, followed by the next resistance is at 225 dollar level. So now if the counter reverse, do watch out the $180 level for the immediate support, right? As it could indicate an initial trend of reversal, right? Also, next we have Rigetti Computing, right? So looking at the charts now, the counter is on its high market structure after rebounding uh, above the $43 level and eyeing for the immediate resistance at $48 level, right? So if the stock to climb higher, we could see that it might travel towards the 53 or the second resistance level, right? So now if the index if the stock to slide lower below the $38 level, this might signal a shift to a bearish structure. Right, so as for the China A50 index, well, it rose on Monday, uh, still driven by the positive sentiment from the China deal. So I believe that the uh, tech and semicons would benefit from this major de-escalation from of the trade tension, provided the strong catalyst to the market. So we see this move as a good rebound phase yesterday. Okay, so again, the overall market, I mean, the overall trend right now is still uptrend and it remains intact. So the recent rebound, I think the recent rebound could lift the market to the 15,500 level, and the immediate support is now remain solid at 14,700 level, right? So for the WTI crude oil price futures, well, I think it started the week a bit positive, slightly positive after the OPEC alliance announced it will pause rather uh, its plan. I mean, the production, the additional production, right? So this decision to basically hold back the supply was seen as a move to protect the prices. So I think the rally was capped. However, the ongoing concern of a long-term global supply still remains, right? Still there. So for now, we believe that the oil the WTI still hold a bearish technical advantage, eyeing for the 57 dollar level. Right, so for the FKLI, for the index futures, well, Monday's rally, I think, was a welcome rebound, something that investors are waiting for, right? But I think it was concentrated in the blue chips and driven by the external sentiment rather than a new domestic catalyst, right? So uh, I think the market is in wait and see approach or mode uh, ahead of the MPC meeting, which is to be scheduled this Thursday, right? So yeah, we continue to focus on the performance of the financial sector and to be prepared for potential market-wide consolidation until the OPR announcement provide a clearer domestic direction, right? But I think overall, the market is expecting for a flat, no change in OPR. So yeah, still keep the long position in our report for FKLI. Continue to expect the breakout above 1535 point level. And whilst stop loss remains at 1535 points. Right. So, yeah, I think most of the sectors rebounded yesterday, in which I believe that the rebound was a bit selective, right? So, yeah, if you see here, the financial sector surge on flying hunting as investors uh, grew confident that BNM will hold OPR steady, which is seen a positive sentiment to the banks, right? So this is our watch list. Yeah, for the heat map, as I mentioned earlier, financial sector experienced a rebound. And if you look here, I think the overall of the market is experiencing a gain yesterday. Right. So also, I mean, I noticed that this one stock that might interest you, which is the ENO. So yeah, I think the recent rebound from yesterday seems like a first leg of a rebound after it breached above the previous high market structure, and also this downtrend line. Also, the index now uh, have reached most of the SMA lines, right? With the moving average lines. Also, in terms of technical indicators, if you see here, MACD is now trending higher above its single line, with RSI pointing higher as well, suggesting a build-up in a bullish momentum, right? So, yeah, this is our Malaysia trading stocks for today. We have Alliance Malaysia, right? So the stock is in its breakout formation after reaching above the 18 ringgit and 20 cent level. So with that, we expect the momentum to remain good, to remain bullish, and the stock able to climb further to test the next resistance at 19, 19 ringgit, followed by 19 ringgit and 50 cents. So if the stock able to clear the 17 ringgit and 70 cent support, this might signal a deeper pullback. Right. Next, we have Techbond. So the stock is the stock is experiencing a pending breakout formation after uh, it tests the 32 cent resistance. So if the stock to remains bullish, we are expecting the price to reach the 34 cent level in the upcoming session with high volume, right? Also, second resistance is at 36 cent level. Do watch out for the 30 cent support for any attempt of reversal. Right, lastly, for the FCPO, well, it plunged, I would say, plunged um, over 2% yesterday to a 12-week low, as the market, I think the market dragged down by a sharp sell-off in oils, right? So this negative external pressure was, I think, enhanced by the new data from the Indonesia, which showing a jump in export, highlighting a lot of global supply. So I think the market is also pricing in slowing demand as we are entering the winter months ahead. Hence, we keep our negative trading bias unchanged, expecting the price to reach the 40, 50 ringgit support level after it reached our support yesterday. So this is our new support, 40, 50, and also 4,000 level, right? So yeah, I think I'll stop here and pass the floor to Faiz for his initiation. Thank you and happy trading, everyone.
Hi, good morning, everyone. Today we got an initiation coverage of Techbond. We initiate coverage on Techbond with a buy call and a target price of 42 cents, implying the 35% upside and 4% FY26F dividend yield. Techbond trading at 11.2 times FY26F PE. The stocks is significantly undervalued versus ASEAN and global peers, despite its niche positioning as the only listed industrial adhesive in Malaysia. With strong net cash balance sheet, expanding export market, synergies from its Malayan adhesive chemicals acquisition back in 2023, we expect the valuation gap to narrow as earning normalize and skills benefit materialize. So a little bit introduction for the company. Techbond founded in 1996, headquartered in Shah Alam, with their operation in Malaysia and also Vietnam. The core businesses of Techbond are manufacturing industrial adhesive, sealant, polymers, and specialty chemicals across various sectors such as woodworking, packaging, automotive construction, and etc. They have a export footprint towards 30 countries, with 60% of the revenue are USD denominated. In 2023, the acquisition of MEC expanded portfolio into upstream resin, formaldehyde-based adhesive. This vertically integrated via Vietnam polymerization plant, giving the cost and quality control advantage. For the growth drivers, the growing of Asia Pacific adhesive market, the industry expected to grow at 6% CAGR to USD 42 billion by 2030, underpinned by urbanizations, e-commerce, electronics, and EV adoptions. Techbond got integrated business model. They have in-house polymer production to reduce the raw material reliance. So they made their own raw material in-house, support the margins, and enhance customer stickiness. The synergy from MEC acquisition, this is to complete the value chain from polymer, adhesive, and also the industrial application. This is very important to them to unlock the cross-selling, cost optimization, and become more dominant in our domestic market. In terms of export traction and new market, they currently recently onboarding of distributors in New Zealand, Russia, and also ongoing discussion with the China and US manufacturer. Strategic benefit from the tariff also. Recently, we being introduced towards their biggest sector tariff, which is woodworking. The management guide the potential US venture are reshoring shift the adhesive demand from China to ASEAN producer. Next is strong balance sheet. The next cash of 104 million, around 50% of the market cap to support dividends and expansions. The ESG scoring is 3 out of 4, which is they are very committed 45% carbon intensity reduction target by 2030. So for the forecast and valuations, following the 2 consecutive years of double-digit growth, bond revenue declined by 3% year-on-year in FY25 to 146.5 million on the back of ASP normalization, ringgit strengthening, and they also got a LNG supply disruption regarding the Putra High explosion, which has impacted the MAC production in the 4Q FY25. But that being said, their gross profit margin still head up to at 27% with benefit of OPEX control and upstream integration. We project FY26 and FY27 revenue growth by 12% year-on-year and 10.3% year-on-year to 164 million and 181 million. This mainly supported by the steady growth in the adhesive segment with 2-year CAGR of 10.1% from the onboarding of the new export customers, a more balanced product mix, and higher value adhesive formulations. Overall, growth should continue to be driven by the expansion of the B2B business-to-business footprint, efficiency gains at MEC, and new product launches. We see a steady gross profit margin development of our forecasted period, which is around 28 to 29% range, supported by the scaling up of the polymerization segment, as well as the portfolio and cost optimizations at MEC. We expected Techbond core net profit to rise to 20.7 million in FY26F, which is 22.4% year on year, and 22.9 million in FY27, which is 10.9% year on year. The growth of our forecast is mainly driven by the stronger double-digit growth of the adhesive segment of our low FY25 base. And also the ongoing restructuring at MEC with an unprofitable and low margin business line discontinue alongside the OPEX efficiencies. So meaning that they're shifting towards more bigger margins product rather than the low margin businesses. The non-recurring losses from low yield product should catalyze a stronger recovery in the group EBITDA from FY26F onwards. This further supplemented by expansions of its customer base with I mentioned just now, the New Zealand and Russia emerging as a new B2B market, and further inroad made in Vietnam, which is continue to benefit from potential corporates and tax rates. Given around 60% of bond revenue denominated in USD, a weaker USD would negatively impact revenue, but the impact should be cushioned by payables in USD. Our sensitivity analysis indicates that any 5% plus or minus changes in the USD MYR will impact the group core earnings by 7 to 8%, or else being equal. Then we talk about the key risks of the stock. It's include weaker than expected demand and orders, tariff uncertainties, USD MYR volatilities, and lower expected margins. These are few risks of the stock. So I think that's all from me. Thank you everyone for joining. Hope to see everyone again tomorrow.